Okay, thank you. Hi everyone, good morning. Good morning students. Gayatri, Isha, Amar, Bhupati, Vijay, Muskan, Anchal, Maithili, Sridhar, Vishakha. Good morning everyone. Uh, so, have you gone through the last chapter clubbing? Anyone? Is that clear? Have you revised? Have you revised clubbing? Okay, good. So today we need to discuss the next chapter, that is aggregation of income and set off and carry forward of losses. I'm just sharing my screen. Anchal, clubbing of minor, what you didn't understood in the minors clubbing? What is the issue in the minors clubbing? You are not clear? Very simple, Anchal. See, if there is a minor child, but people, you have understood the logic? Parents tried, let's suppose parents are having wages income, salaries income. Now parents are trying to shift their passive income. Let's suppose they have their FDs in their name. FDs will have interest. So what they do is gift the FDs to the child, and then the child is earning those interest income. Then parents are already taking benefit of their slab rates, right? Now the child, ideally, if those income would have been taxable to the parent would have to pay 30% tax. But now they have transferred those FDs to the child, and the child will have those incomes, and up to 12 lakhs, including the rebate, the income is exempt, right? So in that scenario, they are doing a planning. That's why they say if the minor is not minor is earning anything from the special talent of the minor, leave that. Everything else will be clubbed in the hands of the parents, because parents may try to shift the income to the children so that they can save on taxes. So that's the club, because ideally minor earning any income, right? No, normally there can, but if minor is having special talent and they are earning from their own labor, manual labor or something, right, then it is taxable in the hands of child only, right? Then that is an exception. Clear, Anchal? So I hope you can see the screen. Let's start with chapter number 5, aggregation of income, set off and carry forward of losses. Now it says aggregation of income. Now what we will discuss, this is a chapter overview. We will come, maybe you can read it towards the end. So in the initial we cannot refer it. So it is, one is as per the 115 BAC, right? One is as per the normal provisions of the act. So there are two charts given for the old regime as well as the new regime. Aggregation of income. See, before going to the book, I will discuss the concepts on the on this file first, then we will go to the book, right? That will be more interactive and that will help you to understand better. See, till now you have understood how to compute the incomes. If you recall, in the last session, I discussed this. Let me open the file. If you recall, in the last session, we discussed how are these 5 chapters placed. We discussed the clubbing, then we are discussing the set off. Then we will compute the total income, gross total income, right? What is set off? Now there is an income under the head salary, below under the head business. Can we set it off? So we are still, now we have studied the individual heads. Now we are discussing their set off. Let's take an example. I have 5 heads of income. Now this is chapter number 5. Aggregation of income, set off and carry forward of losses. See, when I'm just writing on the Excel, just try to increase your speed so you can write with me. But anyways, the Excel files will be there. If anything, it will be left. Now there are 5 heads of income. What are the 5 heads? Salary, house property, cap gains, PGBP, and other sources, IOS, income from other sources. Correct? Now, when we discuss these 5 heads, let's suppose I have income from salary of 20 lakhs. I have income from salary of 20 lakhs. I have PGBP loss. I have loss from business 5 lakh. What will be my gross total income? What will be my gross total income? What will be my gross total income? Everyone, what do you think? I have no other income. Let's suppose I have no other incomes. What will be my gross total income? Can I say 20 lakhs minus 5 lakhs? It will be 15 lakhs. 15 lakhs. See, now I have adjusted this loss with the salary income. I have adjusted this loss with the salary income, but is that allowed? Is that allowed? From gross total income, we will reduce the deductions and then we will compute total income. But the basic question is this loss adjustment allowed? That we are going to discuss today. Now, I'm telling you the answer. This adjustment is not allowed. This adjustment is not allowed because there are some rules. Now, whenever this income and loss I'm trying to net off, I call it set off. I call it set off. Set off. Now, can I set off here? The answer is no. 5 lakh, I cannot set off. 5 lakh cannot set off business loss with salary income. So if I am not able to set off, then I will do the carry forward. I will carry forward this loss. I will carry forward this loss. Clear? So this is what we are going to discuss, what we can set off. If we are carrying forward, is it unlimited or there are number of years? We will see the restriction. In some cases, it will be 8 years. Some cases, it will be 4 years. Clear? Are you clear on the basic concept, what we are going to discuss today? Everyone? Are you with me till here? Okay, great. Now let's discuss. Again, I'm copying the 5 heads of income. Now tell me, in these 5 heads, house property, capital gains, PGBP, and IOS. In these 5 heads, can there be losses in income heads, in these heads? Tell me, can salaries have a loss? Can salary head have a loss? Normally, no. So salary will be always positive. It will be positive, right? Next is house property. Can house property have a loss? Self-occupied house property can have a loss, right? How much is allowed? How much loss is allowed? How much loss is allowed? 200K, 2 lakhs. So it can be positive, it can be negative. Both possibilities are there. Can capital gain have a loss? Can there be a capital loss? Right? It can be positive or negative, both. Can PGBP have a loss? Yes, business can have a loss. In income from other sources, we divide it in 3 categories. First is casual income. Can casual income have a loss? Do I allow the expenses in the casual income? Do I allow expenses? The answer is no, it will always be positive. Next is, give me 1 second, guys. Sorry, just 1 second. Okay, sorry. Casual income. So casual income is positive, is always positive. Next is owning, maintaining race horses. Owning, maintaining race horses. It can have a income as well as a loss. Then next is interest and dividend. It will always be positive. There can not be a loss. Like these are the possibilities in all the 5 heads. If we understand all of these set of scenarios, then there is nothing left. So this is what we are going to discuss today. This is what we are going to discuss today. Clear? Let's take an example. Business 1. I'm having 2 businesses. I'm having 2 businesses. There is business 1, that is a garments business. There's a business 2. Yeah, Arun Sagar, we will come to it. PGBP also specified and all speculation. We will come to it. I'm not introduced. I haven't introduced, but I will introduce that subsequently. Business 2. It is a manufacturing business. Let's suppose from garments business, I am having an income of 5 lakhs. From manufacturing business, I am having a loss of 2 lakhs. Then I have interest income, 50,000. Now, I'm asking income from PGBP. Now, can I say my income from PGBP is 5 lakhs? So, okay. Now, my question here is this loss is of 2 lakhs. Should I set it off against 5 lakh first or against 2 lakh first, against 50,000 first? Sushmita, I have already forwarded the notes to the team. Maybe I'll just look at it. Okay, no problem. It now some are saying against 5 lakh first and some are saying against 50,000 first, right? Now there is a confusion here. Now that's why we call it. Some are saying we should adjust it. If we adjust it against interest income first, if we adjust against interest income first, IOS, so it will be 50,000 income minus 50,000 of the loss adjusted here. So the interest IOS income will be 0 and the PGBP income will be 5 lakhs minus 1 lakh 50,000. So it will be 350. Is that correct? The answer is no. Please write it and cross it. That's how you learn. I intentionally do some of the examples is wrong, then do it correct. Write a note here. First, you set off losses from on head of in from its own head of income. Oblique other sources within the same head. It is called intra-head. Correct, Arun Sagar. It is called intra-head or inter-source set-off. It is called intra-head or inter-source set-off. Then you can adjust against other heads of income known as inter-head set-off. Then balance you carry forward. Then balance you carry forward. Clear? So here in this case, we will adjust 5 lakhs minus 2 lakh first. So the PGBP income will be 3 lakhs and other sources will be 50,000. This will be the correct answer. Clear? Now, next question. Let's come to the capital gains. See, I'm discussing the rules first. We will cover everything from the book as well. Don't worry. Firstly, it is important to understand. Let's come to capital gains. For the capital gains, what two types of capital gain can be there? Inter-head means loss in respective head of income is correct. Inter-head means, let's suppose capital gain we are adjusting with business we are adjusting with capital gains, that is inter-head. Okay. Okay, I'm increasing the font. Sridhar, I think it should be fine. Okay. Because after this, I cannot, I also need to at least show something to you on the screen, right? In fact, what I do is there is no problem in the handwriting, understanding and all. That's why I write on the Excel. So that's why even the legibility is full, right? So, okay, next. Now we are discussing the capital gains. We will discuss head by head. In capital gains, there can be two types of capital gains: short-term capital gain, long-term capital gain. We will discuss four scenarios: A, B, C, and D. If I'm having short-term loss, short-term gain of 2 lakhs, long-term gain of 1,50,000, how much will be my total income? Very easy. How much will be my total income? 3,50,000. If I'm having short-term loss of 2 lakhs and long-term loss of 1,50,000, how much will be my total income? 1,50,000, sorry, 3,50,000 loss. Loss. It is a loss of 3,50,000, right? So next, although I'll carry it forward, if I'm having short-term loss of 2 lakhs and long-term gain of 1 lakh 50, long-term gain of 3 lakhs. If I'm having short-term loss of 2 lakhs, long-term gain, can I net it off? The answer is yes. Short-term losses can be adjusted against short-term or long-term both. The answer is yes, you can net off. If there is a short-term gain of 2 lakhs and there is a long-term loss of 80,000, can I set it off? The answer is no, cannot adjust. Long-term losses cannot be adjusted with short-term, they can only be adjusted with long-term only. Right? So this is not allowed. Now, write a note. Intra-head adjustment allowed. About the intra-head adjustment, capital losses can be adjusted against capital gains only. They cannot be adjusted against other head of income. Next, short-term capital losses can be adjusted against short-term as well as long-term gains. But long-term loss can be adjusted against long-term gains only. Sorry. Short-term capital losses can be adjusted against short-term as well as long-term, but long-term can be adjusted only against long-term. Next note is for inter-head adjustment. Inter-head adjustment is not a, it means capital losses, can I set it off with business gains? The answer is no. Capital losses can be set off against capital gains only, and inter-head adjustment is not allowed. Is it clear? Let's move to the next. PGBP. PGBP. Intra-head adjustment. Intra-head adjustment. Now PGBP, where we have done, Harshal? Okay. Intra-head adjustment is allowed. Intra-head adjustment is allowed. No, we have other concepts as well, Harshal. Intra-head adjustment is allowed, yes. There are two exceptions. There are two exceptions. One is speculation loss. Speculation loss can be adjusted against speculation income only, not against any other business income. Speculation loss can be adjusted only against speculation income, not against any other business income. Second, specified business. Can you tell me the section number? Specified business. What is the section number for specified business? (35 AD). Now there are two provisions. One is, in new regime, are we allowed 35 AD? In new regime, can we claim 35 AD? New regime, person opting for default tax regime. Person opting for default tax. See, if there are some minor typos, please excuse me for that. I'm writing a lot, so minor typos can be there. 115 BAC taken, then 35 AD is not allowed. Then 35 AD is not allowed. If it is old regime, it means opting out of 115 BAC, then 35 AD is allowed. Now losses from 35 AD specified business, it will be applicable in only in case of old regime, can only be set off from income from specified business, not against any other business income. Not against any other business income. Clear? Intra-head adjustment. About intra-head adjustment, let's see what all heads are there. PGBP loss, there is PGBP loss. What are other four heads? Let's suppose income under the head, salary, house property, cap gain, income from other sources. These are other four heads. If this is a PGBP loss, it cannot be set off from salary head. There is a restriction. It means, let's suppose there is salary income of, I took an example, 15 lakhs. There is a business loss of 3 lakhs. I cannot set it off. This is not allowed. This set off is not allowed. So I cannot set off against salary head. House property head I can set off. Capital gain I can set off. See, capital gain losses I cannot set off with PGBP, but PGBP losses I can set off with capital gains. Getting it? Capital gains losses I can set off against capital gains only, and short term against short term or long term against long term only. But PGBP losses I can set off with capital gain incomes. Income from other sources, yes, I can set off, but except casual income. I cannot set off anything with the casual income. Because in casual income, directly I need to pay 30% tax. I hope it's clear till here. Next head. House property. House property, intra-head adjustment allowed. Means loss from one house property, can I set off against other house property? Mentally, we are on house property. We will discuss it. The answer is yes. There is no problem in it. There is property number 1 on which there is a loss of 2 lakhs. There is property number 2 on which there is a loss, there is an income of 3 lakhs. I can set off. I can set off. Next. Inter-head adjustment. Inter-head adjustment. Arun sir, you are asking me about owning, maintaining race horses, but are we on that topic? No. So I will entertain the questions which are relevant. I'm not saying, I'm not denying the questions, but in between the topic, I cannot entertain other questions. You can ask me any number of questions at the end. I will stay in the session. Okay. Please park your questions which are not related to the discussion right now, but I'll surely answer all the questions. By the way, Arun Sagar, if you've already attended the last batch, why are you attending this one? If it is a new regime, it means you're opting for 115 BAC or default tax regime. In that scenario, no set off allowed. Against other heads, no carry forward. No set off allowed, no carry forward allowed. If it is old regime, or I say if you're opting out of 115 BAC or you're following the old tax regime, then it is allowed, inter-head adjustment is allowed up to 2 lakhs. Up to 2 lakhs, right in bracket, against any head of income rest carry forward. Rest carry forward. Is that clear? Give me 1 second. Rest carry forward. This is about house property. Which head is left? We are done house property, PGBP, capital gains, salary, there are no losses, income from other sources, IOS. Income from other sources. Intra-head adjustment. Is intra-head adjustment allowed? The answer is yes. Intra-head adjustment is allowed. But there are two exceptions. There are two exceptions. First, loss from owning and maintaining race horses is allowed only against income from owning, maintaining race horses. Second, casual income, right? No laws can adjust this income because casual income is always taxed rate. Which rate? What is the tax rate for casual income? 30%. Correct. Inter-head adjustment. Inter-head adjustment. There is no loss left to adjust. No provision of carry forward. No provision of carry forward. You cannot carry forward the loss. Clear? Write one note here. In current year, inter-head adjustment is allowed if you were unable to adjust loss. You will carry forward. Next year, when you want to set off this loss, adjustment is allowed only against same head of income. We will take an example. Only against same head of income. Let's suppose there is PGBP loss. You carry forward. You are carry forwarding the PGBP loss. Next year, this loss can be adjusted only against PGBP income. Let's suppose I have only PGBP loss current year. I have only PGBP loss. Okay, maybe let me take a brief example. Year number 1, PGBP loss 2 lakhs. Interest income 30,000. What will be the gross total income? What will be the gross total income? Can I set off? Can I set it off? The answer is yes. But this cannot be negative. So 170K loss I will carry forward. I will carry forward for 8 years. Next year, year number 2, let's suppose I am having no business income. I am having salary income. Because I was having loss in the business, I wind up the business. Salary income, 10 lakhs. I'm having interest income, 50,000. Now, this is 10 lakhs. Can I set off this 170K loss here? There is brought forward loss of 170K. Can I set off? Can I set off brought forward loss of 170K? Anchal is saying yes. The answer is no. See, that's what I tried to explain. Next year, whenever you carry forward the loss, that will be allowed to adjust against same head of income. Is there any PGBP income? The answer is no. Because next year, loss can be set off from same head of income only. Clear? Okay. Next. Another question I have is, one second. Let me just check. Okay. I'm having income from 35 AD business. When I'm writing 35 AD, it means I'm following the old regime because that is available in old regime only and normal business. Let me write in 35 AD business and normal business. From 35 AD business, I'm having loss of 2 lakhs. Normal business, I'm having income of 5 lakhs. Can I set off? Can I set off? 35 AD losses can be set off against 35 AD incomes only. No set off allowed. Let's suppose opposite scenario. 35 AD is having income of 5 lakhs. Normal business loss of 2 lakhs. Can I set off? The answer is yes. Here the set off is allowed. Here the set off is allowed. Next question. I'm having capital loss 3 lakhs. I'm having PGBP income 5 lakhs. Can I set off? Can I set off? Capital losses can only be allowed against capital incomes only, capital gains only. No set off allowed. Capital losses 5 lakhs. PGBP minus 3 lakhs. Is that allowed? Can PGBP loss set off against capital heads? The answer is yes, set off allowed. I hope it's clear. Okay, let's come to the book now. Come to this page, aggregation of income. Aggregation of income. In some cases, some amounts are deemed as income in the hands of assessee, which they are not actually income. These cases, see, let's suppose you have some income, but you haven't declared as income. You have received income, but you haven't declared those in your income tax return. Whenever the income tax officer will catches you, whenever the assessing officer will catches you, they will levy these section 68, 69, 69 A, B, C, and D, and they will say, okay, this is also your income. These are discussed in detail at final level. Sorry, have you also, okay, these are discussed in chapter number 1 as well, okay? But more we discuss in detail in final level. The assessing officer may require an assessee to furnish information explanation in such cases. If the assessing officer does not, if the assessee does not furnish explanation or the explanation is not satisfactory, the amount referred will be deemed to be the income. Some amounts have to be aggregated with the assessee's income. Concept of set off and carry forward. See, I will not read line by line. Where it is very simple, I will not read it. Okay, you need to read it yourself. But yeah, all the logics, all the questions, all the concepts should be clear to you. First topic, inter-source adjustment. Under this section, losses incurred by the assessee in respect of one source can be set off against any other source under the same head of income. Since the income under each head is to be computed by grouping together, the net result of activities is all sources covered by that head. In simple terms, loss from one source can be adjusted against income from other source, both the sources being under the same head. Like loss from one house property can be set off from another house property, loss from one business can be set off against other business. Impermissible. What is not permissible in inter-source? We discussed long-term losses. Can long-term loss be set off against short-term gains? The answer is no. Short-term losses is allowed to be set off against short-term and long-term, but long-term losses cannot set off against short-term capital gains. Speculation loss. A loss in speculation business can set off against the profits of other speculation business, not against any other head of income, not against any other business. Losses from activity of owning, maintaining racehorses can be set off against income from owning, maintaining racehorses. Specified business. Loss from specified business can only be set off against loss from income from specified business only. And it is when you are shifting out of the default tax regime, you are following the old regime. However, losses from other business income can set off against profit from other specified business. Loss from an exempt source. If the income is exempt, loss is also exempt. You don't get the benefit of loss. Then it is again cannot be set off against taxable source of income. Am I reading fast? Everyone. Am I reading fast? I think we have covered all the concepts. That's why. Okay, I'll try to be a little bit more slow, but I have covered all the concepts. That's why I was just discussing it. Okay, because I'm not reading line by line. I'm just highlighting few things. Okay, Anchal, I'll try to be somewhat slow, but because I have discussed all the concepts. See, what I want in the classes is I don't want a mechanical book reading, because that reading you can do it yourself as well. It is more of the conceptual knowledge I prefer to discuss in the classes. Inter-head adjustment. Losses from one head of income can be adjusted or set off against income under other head. Right? We can adjust from other head. Loss under the head other than capital gains, where the net result of computation under any head of income other than capital gains is a loss. The assessee can set off such loss under any other head including capital gains. Loss from PGBP, where the net result of computation from profit and gains of business profession is a loss. PGBP losses cannot be set off against income from salaries. It can be set off against all the heads except salaries. Losses under the head capital gains, they can only be adjusted with capital gains. Where the net result of computation is under the head capital gain is a loss, whether short term, long term, such capital loss cannot be set off against other head of income. Losses under the head house property, loss under the head house property would not be allowable to be set off against other head if they are paying under the new regime. But if they are following the old regime, it is allowed up to 2 lakhs. However, if the assessee exercises the option of shifting out of the default tax regime under 115 BAC 1A, and if there is a loss under the head income from house property, the assessee has income assessable under other head of income. The maximum loss from house property which can be set off is 2 lakhs. In other words, the amount of such loss exceeding 2 lakh would not be allowed to be set off against other head of income. Speculation losses or activity of loaning maintaining resources, they cannot be set off against other head of income. Losses from 35 AD business, again, when you're shifting out of the default tax regime, they can be set off only against income from other head income from they cannot be set off against other head of income. Clear? If the income of a source is exempt, loss will also be exempt. Loss cannot be set off against taxable income from a different source or taxable income under a different head. Is that clear? I hope the reading should be fine now, right? Next, carry forward. Carry forward. If it is PGBP, in PGBP we have discussed 3 types of losses. One is normal business loss, another one is speculation loss, then there's 35 AD, specified business. Normal business loss you can carry forward for 8 years. If you are not able to set off, see, when is the carry forward? First you do intra-head, then inter-head, then you do the carry forward, right? Carry forward is for 8 years. Speculation is carry forward for next 4 years. 35 AD business loss you can carry forward for infinite. Infinite. Salary doesn't have a loss, so we have not written salary. Next, capital gains. There can be two types of capital gains: short-term capital loss, capital losses. I need to write capital. Under the head capital gains, there can be capital loss, short-term capital loss, or long-term capital losses. These can be carried forwarded for how many years? 8 years. Again, 8 years. Okay. Carry forward is allowed for 8 years. Then house property. Can I carry forward the house property loss in new regime? Can I carry forward the house property loss in new regime? It is again for 8 years, only in the new, only in the old regime. Then income from other sources, again there are three. See, interest dividend, normally there are no losses. You see here, we had discussed. Casual income, there are no losses. Owning, maintaining raw sources only can have losses. So we will discuss this thing. In fact, let me copy paste this chart over there. Before carry forward, let me copy paste this chart. Right. Income from other sources, there can be only loss in owning, maintaining raw sources. So loss from owning, maintaining race horses can be carried forwarded for 4 years. So can I say in nutshell, it is 4 years, it is 4 years, and it is infinite. Remember, remember these three, rest all are 8 years. Remember these three, rest all are 8 years. Now let's suppose there is a current year. What is the current year we are following now? Assessment year 26-27. So we can carry forward the loss of assessment year 26-27 till, if it is a normal business loss. Normal business loss. Assessment year 26-27. We can carry forward till assessment year 2027-28, 2028, 2029, 2030, 2031, 2032, 2033, 2034, I think it's 8. Yes. So 28, 29, 29, 30, 30, 31, 31, 32, 32, 3, 33, 4, and 34, 35. Till these assessment years, I can carry forward the losses. I hope it's clear. Let's come to the book. Carry forward and set off of loss from house property. Section 71B. If the assessee house property, if the assessee is opting out of old default regime, it means old regime they are following, then such loss will be first set off against income from any other head to the extent of 2 lakhs. Only up to 2 lakhs inter-head is allowed. The unabsorbed loss will be carried forwarded to the following assessment year to set off against income from house property only. I have already said next year, in the year of after carry forward, next year you can set off against same head only. So it is carried forwarded. One second. It is unabsorbed loss will be carried forwarded to the following year. How many years carry forward it will become? If they're following the concessional regime, new tax regime, this is not allowed to be set off. Would not be allowed to be set off and would not be carried forwarded to the other following year. Maximum period is 8 years, 8 assessment years, immediately succeeding the year in which the loss was first computed. Can you see the note we had written? This is an important note. Once a particular loss is carried forward, it can only be set off against the income from the same head in the forthcoming assessment years. This example is a simple one. You can do it. I'm not doing illustration number 1. I will do other ones. Okay. Whichever are the simple ones, I'll skip. Whichever I feel we should discuss, we will discuss in the classes. Carry forward and set off of business losses. Under the Act, the assessee has right to carry forward the loss from business or profession in cases where such loss cannot be settled due to absence or inadequacy of income under any other head of income in the same year. The loss so carry forward can be set off against profits of subsequent previous years. Section 72 covers the carry forward and set off from a business. Conditions. The assessee's right to carry forward business loss is, however, subject to the loss have been incurred in the business profession or vocation. The loss is not speculative in nature, right? Loss from one business can be carried forward and set off against income from other business. The loss may be carried forward and set off against income against the income and from the business profession, though may not necessarily against the profit and loss of the same business profession. One business loss, let's suppose garments business loss, I can set up against manufacturing business income. However, a loss carried forwarded, okay, speculation. Haven't you studied speculation earlier in PGBP head? Speculation is, I think you should have studied speculation. Speculation is when you are not actually taking the delivery of the goods. You are just, let's suppose, let me give you an example. When you have you heard of intraday trading? Intraday trading, non-delivery based commodity trading, right? Those all comes into speculation where there is no actual sale purchase going on. You are just playing on the margins. You are just taking the price differences. Call options, put options, right? Person who incurred the loss alone is entitled to claim the carry forward. Now, the one who has incurred the loss will be able to claim. That is, only the person who has incurred the loss is entitled to carry forward and set off the same. Consequently, the successor of business cannot carry forward and set off of his predecessor except in case of succession by inheritance. Let's suppose you sell off the business to someone else, that person cannot claim the loss. If you sell off the business to someone else, that person cannot claim the loss, because ideally, if that was your loss, you only can claim it. Maximum period of carryover is 8 assessment years. Let's do this question. Sorry. Illustration number 2. Let's do it. Let's do illustration number 2. Let me take a screenshot of it and paste it. Mr. B, a resident individual, furnishes the following information for previous year 25-26. Okay. Now, how to solve these questions? Salary head computed. Computed means 75K is already given. See, always read here. Assuming that he pays the tax under the 115 BS, it means we need to follow the new regime. Salary head income is 45,000. Income from house property is 24,000 loss. Income from non-speculation business, it means normal business. Normal business, 22,000 loss. Then it is speculative business, 4,000 loss. Short-term capital losses, STCL, 25,000 loss. Then long-term capital loss, 90,000. Sorry, income, long-term capital gains. It is gain income, right? Now tell me, salary head, there is income. House property losses. If it is new regime, is house, can I set off the house property loss with the other heads? The answer is no. There is no set off allowed, no carry forward. There is no set off allowed, no carry forward. Normal business loss, we will come to it later. Speculation loss, there is speculation loss. Can I set off against other heads of income? The answer is no. There is no other speculative income. There is no other speculative income. So I will carry forward this loss, 4K. Can I carry forward the house property loss? The answer is no, because even the carry forward is not allowed. Short-term capital losses. Can I set off the short-term capital loss with long-term capital gains? Right? How much I can adjust? 19K I can adjust. 19K adjust here against long-term capital gain. The rest, the balance, 6K you will carry forward. The rest 6K you will carry forward. Right? The rest 6K you will carry forward. Because you cannot set it off against the other heads. Right? Now the only income left is business, salary income and business loss. Can I set off the salary income with the business loss? The answer is no. So what I will do, I will carry forward this loss. I will carry forward this loss. So can I write? They're asking me to calculate total income. Salary head, there is income of 45,000 to 45,000. House property, there is income of 0. There is no carry forward. No carry forward in new regime. No carry forward allowed in default regime. Business income, again 0. There will be carry forward of 22K. Speculative income, 0. But there will be carry forward of 4K. Then long-term capital gains, 19K. Short-term capital gains, capital loss, minus 19K you will adjust here. So the income here will be 0. And the balance 6K. 6K short-term capital loss you will carry forward. Right? Next. So ideally your total income will be this much. 45K. Is that clear, everyone? This will be your answer. Okay. Let's see if we are correct. 45K. See, whenever you write in exam, you need to give notes like this. If you will not write these notes, you will not get the marks. Because how the examiner comes to know that you know these concepts, right? Losses in speculation business. Section 73. The meaning of expression speculative transaction as defined in section 43.5 and the treatment of income from speculation business has already been discussed under the head PGBP. Now set off and carry forward of loss from speculation business. Since speculation is deemed to be business distinct and separate from any other business carried on by the assessee, The losses incurred in speculation business can neither be set off in the same year against any other non-speculative income, or nor can be carried forward and set off against other income in the subsequent years. Therefore, if the losses sustained by the assessee in a speculation business cannot be set off in the same year against any other speculation profit, they will carry forward to the subsequent year and set off against income from speculation business in the next year. Loss from the activity of trading in derivatives is not to be treated as speculation loss. Maximum period carry forward, there is 4 years carry forward. Now this is a new point here. When a business of a company is deemed to be speculation, the explanation to this section provides where any part of business of company consists of purchase sale of shares or other companies, such company will be deemed to be speculation, right? If the company is engaged in purchase sale of shares of other companies, it is deemed to be speculation to the extent business consists of purchase sale of shares. But this is a deeming provision. This doesn't apply if the company is declaring the head. See, on the securities, then normally there is interest on securities. You are declaring the income under the head house property capital gains, and the principal business of the company is trading in shares, banking, loans and advances. See what it says. If a company is dealing in shares, if a company is doing regular trading of shares and securities, then that company's income is treated as speculative income. But if that company's business is trading in shares only, then it's fine. Then it is not speculative. Then it is non-speculative. Thus, these companies would be exempted from the operation of the explanation. Accordingly, if these companies carry on the business purchase sale of shares of other companies, they would not be deemed to be carrying on a speculation business. Next, section 73A. I hope everyone is with me till here. I hope everyone is with me till here. Vishakha, Anchal, Harshal, everyone. Sridhar, okay. Great. Specified business. What we have discussed for specified business, 35 AD business. That 35 AD is first it is in old regime only. Then 35 AD business loss can be carried forward for indefinite number of years. And the 35 AD loss can be set off against 35 AD income only. Set off and carry forward. And excessively exercising the option of shifting out of the default tax regime. It means they are following the old regime and carrying on the specified business can claim deduction under 35 AD in respect of capital expenditure other than land, goodwill, and financial instruments incurred in respect of such businesses subject to fulfillment of certain conditions. Any loss computed in respect of specified business be set off only against profit and gains of any other specified business. The unabsorbed loss, if any, will be carried forward for set off against profits and gains of any specified business in the following assessment year, and so on. Loss can be set off indefinitely. There is no time limit specified for carry forward and set off. Therefore, such loss can be carried forward indefinitely and set off against income from specified business. There is no time limit. They can be set off against income from specified business only. There is no 8 years limit here. Under the optional tax regime, the loss of an assessee claiming deduction under 35 AD can be set off against the profit of another specified business under section 73A, irrespective of whether the latter is eligible for 35 AD. An assessee can therefore set off loss of an hospital or a hotel which begins to operate after 1st April 2010, which is eligible for deduction under 35 AD, against the business of existing business of operating a hospital at least 100 or a hotel, even if the latter was not eligible for the deduction under 35 AD. See, 35 AD section came after 1st April 2010, right? So if there is any other business which is a qualified business but for which you are not claiming 35 AD business, let's suppose you are already having a hotel. Now you are establishing another 2-star or above category hotel. Now for that business loss, you can set off with other eligible 35 AD business. Then capital gains, carry forward in set of losses, short-term capital loss. Short-term capital loss you can set off against short-term or long-term. Long-term capital loss is a where the loss so carried forward is a long-term, it can only be set off against long-term. Loss under the head capital gains. Net loss under the head capital gains can be set off against income from any other head. Cannot be set off. You cannot set off against other heads of income. What is the period for carry forward? 8 assessment years. Clear? Long-term capital gain exceeding 125k arising on sale of equity shares. You would have studied section 112A, right? Long-term capital gain exceeding 125k arising from sale of equity shares on units of equity-oriented fund or units of a business trust on which STT is paid in respect of equity shares, both at the time of acquisition and sale, in respect of equity-oriented fund at the time of sale. Then section 112 is applicable 12.5%. Long-term capital loss on such sale units can be set off against carry for against long-term only. They are saying because it is long-term losses can be set off against long-term gains only. Illustration number 3 is very simple. You can do it. Clear? See, 12.5% is the rate. There is no role in the set off. 12.5% is the rate. That's what they are saying. This in what they say, long-term capital loss on sale of such shares can be set off against set off and carried forward against long-term capital gain by virtue of section 73 and 74. This long-term loss can be set off against long-term gains only. That's what they are saying. Clear? Uh, let's do one thing. Let's take a quick break now, and then we will continue with owning maintaining resources. Clear? So it's 12:18. It's a 10-minute break. We are going on a 10-minute break. Then we'll start again. Thank you very much. Okay. So we were on the losses from activity of owning, maintaining racehorses. Set off and carry forward and set off and carry forward and set off of loss. Set off means in the current year. Carry forward and set off means in the next year when you will carry forward it and set off. The losses from incurred by the assessee from the activity of owning, maintaining racehorses cannot be set off against any other source except owning, maintaining of racehorses. Maximum period for carry forward is 4 years. Meaning of certain terms. What is the minimal loss? Loss by the assessee in activity maintaining racehorses. If there is no income, then whatever expenditure are incurred for maintaining racehorses, that is a loss. The assessee has income by way of stake money. If they have some income, then stake money minus if any expenditure is there. Anchal, if it is not set off and if it is not set off in the next 4 years, then it is lost. You cannot do anything with the loss. It is lost. Who is a horse race? What is a horse race? That which betting or wagering may be lawfully made. Income by way of stake money, the gross amount of prize money received on a race horse or racehorse by the owner thereof. Clear? Illustration number 4 you can do. Very simple it is. I will take comprehensive illustrations which cover all the heads, not just one head. Order of set off. The provision for section 72 brought forward loss is set off before setting off unabsorbed depreciation. There is a concept of unabsorbed depreciation as well. Okay, it's not coming here. Have you discussed the unabsorbed depreciation in case of PGBP? PGBP head, have you discussed unabsorbed depreciation? Have you covered unabsorbed depreciation in PGBP? Right? So unabsorbed depreciation, I'm just taking an example. There is business income, 3 lakhs. There is business expenses except depreciation, 2,80,000. Tax depreciation is 50,000. My net is 30,000. Will my 30,000 loss be carried forward? No, because it is because of the depreciation. This loss is coming due to depreciation. So I will not carry forward it as loss. I will carry forward it as unabsorbed depreciation. How much? 30,000. It is carry forwarded indefinitely, right? And it can be set off against any head of income except salary and casual income like PGBP. And I will carry it forward to the next year. Then in next year, you can set off against PGBP only. Against PGBP only. Clear? This is the concept of the unabsorbed depreciation. Note it down. Okay. So brought forward business loss is to be set off before setting off unabsorbed depreciation. Then the order is followed. Firstly, you allow the current year depreciation. Then you allow current year capital expenditure on scientific research and current year expenditure on family planning. then brought forward loss on business or profession, then you allow unabsorbed depreciation, then you allow unabsorbed capital expenditure on scientific research, then you allow unabsorbed expenditure on family plan. Illustration number 5 you can do. I will discuss two other questions. Comprehensive one. Submission of return. Submission of return of loss. Whenever you are claiming loss on the return, you call it return of loss, right? You call it return of loss. Now, if you are claiming loss as business loss or speculation loss or a specified business loss or a capital gains loss or owning maintaining loss, you need to file the return within the due date prescribed in 139(1). If you will file the return late, these losses will not be allowed. These losses will not be allowed. Right here. In order to claim losses, in order to claim and carry forward losses, you need to file the tax return on time. Otherwise, losses are not allowed. Except house property loss and unabsorbed depreciation. It means they are allowed even if you file the return late. It means it is allowed if you file the return late. This condition does not apply to loss from house property brought forward section 71B and unabsorbed depreciation 32(2). Clear? So this completes our chapter, but we will practice some questions now. Let's come to question number. Let's practice this question. Question number 1. Compute the gross total income of Mr. F from the information given below. This is question number 1 from Test Your Knowledge. Okay. Income from house, you need to calculate the gross total income. Income from house property, 1,25,000. Income from business before providing for depreciation, PGBP, is 1,35,000 before providing for depreciation. Short-term capital loss, capital gain, sorry, STCG, 56,000. Long-term capital loss brought forward from assessment year 25-26. Exam format I should solve. Okay. Although it's given here, but no problem. I'll solve it. Let us solve it in exam format. Okay. How you will do it in exams. See, you will prepare the computation of income, computation of gross total income. Is the name of the person given? Mr. F. So you can write Mr. F. here. Mr. F, computation of gross total income. See, I will say, Vishaka, even if you are solving it in exam format, you can do prepare some workings, right? I will say you can write it even the exam. Like you can prepare a book, you can write as rough workings, or you can write a note here, you can solve it. Just take an idea like this, I will solve it in the exam format as well. Okay. So house property, because it will be easy for you to solve. Examiner doesn't stops you to make any workings, right? You can do a working towards the end, you can write as rough workings or something, right? Then business PGBP. If you will write as rough working, the examiner will not evaluate that. That is for your understanding only. Okay. PGBP, short-term capital gains, 56,000. Then long-term capital loss, it is brought forward minus 90,000. Right. Income from T business. There is one more T business here. Tea business, what is the specialty in tea business? How much income is considered from agriculture income? 60% is agriculture income, 40% is taxable income. 120k into 40%, 648 is taxable income. Dividends, IOS, I can write IOS, income from other sources, 80,000 dividend. Then current year depreciation, a depreciation was not reduced here. I am reducing the depreciation from here, minus 26. And brought forward business loss. I'm also writing there is a brought forward loss of 45. Right? Now tell me, firstly, try to solve it. Long-term losses, can it set off short-term losses? Again, it is again brought forward loss, not current year loss. It cannot set off. So you will carry it forward later on. You will carry it forward, right? You will carry it forward. You will carry forward it. Next. There is a loss under the head PGBP. Where there is income, there is no problem. See, there is low income under the head PGBP. So depreciation is allowed because it is not creating a loss. It is not an absorbed depreciation. So it is this much. Now there is a brought forward loss of 45k. Will that be allowed? Yes, because you have other incomes. The 45k loss will be allowed. What will be your PGBP income? 109k plus 48k plus minus 45k. 112k will be the income. So very simple now. Now you got an idea like this, right? You can prepare your workings now. Now you know the answer. It is very easy. Computation of gross total income, right? Now you will see, firstly, you will do the heads of income. You will write the heads of income, right? Okay, assessment year, which is assessment year 26-27. You can write assessment year 2026-27. Make a table format. You can write here particulars. And then you can write here amount. This is your page of the book, a notebook. You can just draw a simple line here. I'm solving it in the exam format so that you know okay how to solve it. You just draw two lines, no fancy designing required. You need to save your time in the exams. Firstly, you write income from house property. Income from house property. How much? 125k. It is the final, nothing set off allowed. 125k. Then income from business. Income from business. You write profit. There is an internal column that you need to create, profit before depreciation. How much? 135k. Then 26k is the depreciation less current year depreciation. How much? 26k. Yeah, there is no current year loss, right? First you need to set up the current year loss, then carry forward loss. Yeah, that's correct, Anantal. First you do the current year adjustment, right? But first you do the intra-head adjustment, Arun Sagar. That is also good. Intra-head, if there is a brought forward loss here, first you will address the brought forward loss. Intra-head adjustment you will do first, right? Next, you will adjust the brought forward losses. Sorry, T business is also there. I forgot. T business. You see, T business ideally should have a note because you are taking the 40% income. You can write here note number 1. You can write here note number 1. So it will be T businesses 48K. You can also give the calculation here 120K into 40%. Or your note number 1 is also fine. Then there is a loss of 45K. Ultimately, you total this up 112K. Then there is a capital gains coming. Income from cap gains. Cap gains is coming. Short term cap gain 56K. Short term cap gain. You write here 56K. For long term is not allowed. In fact, that was brought forward. We can cover it in the notes. Income from other sources. In fact, what I used to do, see, as of now, I'm doing like this. But what I used to do, I normally have an idea till, let's suppose I have an idea this computation will be covered in one page. So in fact, leave some page extra and start writing notes side by side because you cannot come to it. You have so much things to deal with in the exam. You cannot come on it again. What I used to do when I used to give the exams, right? I do like this, prepare a computation like this. Let's suppose I know it will take one page, leave 1.5 page, no problem in it. Leave 1.5 page and then go ahead. This is dividend income 80,000, right? Because first you complete the table, then you go to the notes. It is not practically possible to think in exam twice, right? You can directly start the notes after the table side by side. Note number 1 was, it is about the T business. T business. You can say in T business, 60% income is agricultural income. 40% is taxable income. One note you have given, one note you were to give about the long term. This was a long term loss of 90K, right? Long term loss, long term loss, long term capital loss. What's happening? Of 90K cannot be adjusted since the long term losses can only be adjusted against long term gains. And there is no long term gain in the current year. It will be carried forwarded. If you know the section number, you can also write the section number, right? Clear? I believe these two notes were the mandatory notes at least you should have here. If you want to write a note for depreciation, you can write because depreciation is allowed because it is not creating a loss, right? So this was question number 1. Is it clear, everyone? The way to write in exam is also clear. Okay. Next. Let me see. Okay. So the answer here was 373K, right? Should we practice one more question? Question number 2 also we are doing. Okay, one more question we are doing. Question number 2. Mr. Sohan submits the following information for assessment year 26-27. Calculate the gross total income and the losses to be carried forward, assuming he has exercised the option of shifting out of the default tax regime. It means they're following the old regime now. We need to take care. There can be some items which are specific to the old regime, right? Like house property losses and all, 35 AD. Now, I can copy this table. Okay. Income from salary 3 lakhs. Loss from let out property, house property loss 40K. Income from sugar business, PGBP 50K. Loss from iron ore business, there is a brought forward loss 120K. Let's see. Short term capital gains minus 60K. Long term cap gains 40K. Dividend income from other sources, dividend income is 5K. Lottery income I need to write separately, casual income 56K. Winning of card games, sorry, 50K. Winning of card games, that is also casual income, I can add it here, 6K. 56K. Agriculture income is non-taxable, right? Short-term capital loss 111A. There is another short-term capital loss of 10,000. Bank interest on deposit 5,000, I can include it here, 5K plus 5. Dividend interest, right? So this is the scenario. Now tell me, short-term capital loss of 70K is there. Can I adjust against long-term? Is this adjustment allowed? Yes, this is allowed. But up to 40K you can adjust. Up to 40K you can adjust. The balance 30K you will carry it forward. 30K carry forward. Right? What is the other loss? House property loss. Can I set off the house property loss in the old scheme? Yes, up to 200K you can set off. Up to 200K you can set off. Right? So, house property loss, let's suppose you set it off against salary. You can set off against salary as well. Right? So salary income will be 300K minus 40K. House property is 0. PGBP 50K loss. 50K loss is there. Brought forward loss of 120K is there. Up to 50K you can adjust. So it will be 50K minus 50K. See, house property loss I could have adjusted with PGBP as well. But since PGBP loss I can adjust here with this, so I will not adjust it. I have adjusted which is not allowable against others, right? So it is 0. Now brought forward loss, how much is remaining? 70K carry forward. Now here short-term capital loss is again 0. Now 30K loss you will carry forward. Long-term capital loss grain is 0. Income from other sources is 10,000. Casual income is 56. What is the answer? It should be 326. It should be 326. Let's check the answer. Question number 2. Yes, 326 is the answer. PGBP loss. There was a brought forward loss of last year. There was a brought forward. This was the income. 50K was the income. There was a brought forward of last year. I can adjust against PGBP. So I've adjusted 50K here and 70K I carry forwarded. Is that clear, Anchal? Okay. So this way you can do practice. Now, see, I believe the section numbers are also important. Please try to remember some section numbers. In this chapter, there are few sections. Section number 70, section number 71. There is section 32.2. You can find all these sections in the summary as well. Right? All this written here. This is written, but if you prepare a short table, that is good. Section number 71B. Because if you write the section number, the examiner, surely you are at a better edge and you will get more marks. Section number 72. You don't have to specifically learn the section numbers. It will automatically get remembered if you will incorporate it in your studies. Section number 74 and 74A. Section number 70 is for intra-head adjustment. 71 is for inter-head adjustment. 32.2 is for unabsorbed depreciation. '71 is for house property loss, unabsorbed loss. 72 is for unabsorbed business loss. 73 is for speculation loss. 73 is for specified business loss. 74 is for capital loss. 74 is for race horses loss. Okay, sorry, it is intra-head. Thank you for the correction. I had spoken intra-head but written intra-head. Okay. So if you will prepare a small summaries like this, it will be easy to remember. Clear? Do you want to practice some MCQs? See, what I'm planning is we have half an hour left. I have some MCQs which will take just 5-10 minutes. Then I want to start the next chapter because next chapter is somewhat big. We can utilize the time which we have for today, right? I will start with deductions. I will give you the basics of the deductions, okay? So let's practice this MCQ. One second. Yes. What is the answer? Okay. Loss under the head cannot be set off. Can you set off loss under the head capital income? Yes, you can set off with capital gains. You can set off with property, but you cannot set off with salary. Salary head. Sridhar, why all of the above? You cannot set off the PGBP loss with salary, right? But you can set off with capital gains, and it is the income from capital gains, not loss from capital gains, right? Please pay attention. Second, which of the following losses after inter-source set off cannot be set off against other heads? Can you can you just specify speculation business loss from other heads? The answer is no. 35 AD, no. Capital gains, no. All of the above is the answer. Very simple. Question number 3. Unabsorbed depreciation, infinite years. Very true. Infinite years. Question number 4. Mr. X has earned salary income of 500k. He has suffered loss from house property 250k. Speculation loss. Can you adjust speculation loss? Whether you are old scheme, new scheme, doesn't matter. You cannot adjust. So your income will be how much? Gross total income. Salary income, house property loss. So speculation loss you cannot adjust. You're in the old scheme. Old scheme. 500k is the salary, house property 250k. You can adjust up to, in the old scheme you can adjust 200k. So 500 minus 200, how much? 300. 300k is the answer. C is the answer. Anchal, why option A? Why option A? House property, old scheme, you can set off. Question number 5. Mr. A has earned a salary income of 500k, suffered loss of house property 25k. General business loss 100k. Business, they have opted out. Business loss can you adjust against salary income? The answer is no. But this you can adjust up to 200k. Yes, it is below 200k. So 500k minus 25k is 475k. Right? Last question. Question number 6. Mr. H for the previous year, business loss 130K, income from salary 240K, speculation, okay, they're opting out. Speculation gain, there is a gain now, speculation gain and business loss. Can this business loss you can set off with salary? The answer is no. Can this business loss you can set off with speculation gain? The answer is yes. So how much is your income? Salary is 240K. Salary is 240K. Now this business loss will set off against this. So still 20K loss left. 20K will be carried forwarded. So the salary income will be their answer. 240K. Clear? So this is your set of chapter. Now let's start with chapter number 6. Everyone, are you with me? We will just discuss the basics of chapter number 6, okay? Harshal, I had shared the notes with the team, but I'll check if I need to upload it, I'll surely upload it. I will check the process with the team, okay? Normally, I had shared the notes with the team. I will check it and upload it. Okay, chapter number 6. Now, what we do in chapter number 6 is deductions from gross total income. Deductions from gross total income. Now, what do you mean by deductions? See, when you have computed the income under various head, have you taken deductions? When you computed the income under various heads, have you taken deductions? Various deductions, like let's say section 54 was there, right? Capital gains. Arun Sagar, section 10 is exemption, not deduction, right? Rental, you take 30% deduction, 24A, right? So salary, you take 75K standard deduction. Those are the deductions you take under respective heads. Those are the deductions you take under respective heads. So deduction while computing income, income under the head. Now, but when you have computed income under the 5 heads, salary, house property, cap gain, PGBP, IOS. When you have computed the income under the 5 heads, we call it gross total income. We call it gross total income, GTI. From this, we reduce deductions under chapter 6A. Deductions under chapter 6A. And then we calculate the total income. These deductions we are going to study now. These deductions we are going to study now. Now, if you will come to the book, there are 4 types of deductions. In fact, you can say it 5 in a sense. There are deductions under chapter 6A. There are deductions under chapter 6A and deduction under section 10AA. . So there are, in basic, there are two types of deductions. Deduction under chapter 6A and under section 10AA. Do you know the difference between subsection and clause? Do you know the difference between, okay, section 10 and 10AA are different, right? 10 and 10AA are different, right? This is the additional section, right? By the way, do you know the meaning of do you know the meaning of subsection and clause? Do you know the difference? Yes or no? Okay, fair enough. If you know it, good. Good. Deduction under chapter 6A and 10AA. 10AA is when you have exports, when you're doing exports, there will be some deductions that will be given to you. That is a specific deduction we will study. Here, there are four types of deductions. Here, there are four types of deductions. Deduction in respect of certain payments. Certain payments. When you do certain payments, it is for certain incomes. It is for other incomes. It is other deductions. This all is given in your book. In fact, given in better format. Now, four types of deductions are there. Deduction in respect of certain payments. If you will do one of these payments, you will get a deduction. Deduction in respect of certain incomes. If you will have these incomes, you will have, like, let's suppose if you have royalty income, then you can claim this deduction. Deduction in respect of other income. If you will have interest income, then you will get this deduction. Other deductions like ATU, if you will have disability, you will get other deduction. So this is classified in four types of deduction. Now, most of the deductions are in your curriculum, but deductions in respect of certain incomes, these are not fully in your curriculum. These are not fully in your curriculum. Right? This is called heading C. Heading C. Chapter 6A, heading C. Now, these are not fully in your curriculum. And the most important point is almost all of these deductions, except three deductions, almost all of these deductions, except three deductions, are not available in new regime. Almost all of these deductions, except three deductions, are not available. What is these three deductions? ATCCD2. What is ATCCD2? Forget. We will discuss all of this. Then ATCCH2 and ATJJAA. Except these deductions,
in
do not
progress.
include in income, and it is included in income, then deduction is taken. Included in income, then deduction is allowed normally. Right? So these are some of the basic terms. Let's come to the book. General provisions. The various items of income referred to in different clauses of section 10 are excluded from the total income of the assessee. These are known as exemptions. A particular income exempt from tax shall not enter the computation of income. However, there are certain types of income which are not exempted, right? There we pay the concessional rate of tax. Like even if it is in section number 10, leave travel concession, house rent allowance, do we get exemption on it? If we get house rent allowance, we pay the concessional rate of tax because some deduction is allowed. Some deduction is allowed, right? Some HRA amount is exempt, right? That's why we get the partial, pay the concessional rate of tax on it. Next, deduction. Deduction in relation to chapter 6 and section 10AA is reduced from gross total income to arrive at the total income. These are income, there are incomes which are included in gross total income but are wholly or partly allowed as deduction under chapter 6A in computation of total income. If the assessee has exercised the option of shifting out of the default tax regime and pays as per the optional tax regime under the normal provisions of the act. If you are under the old regime, then only you get all the deductions. Deduction is allowed on specific investment expenses incurred by the buyer to promote the culture of savings investments. This could include medical expenditure. If you give donation to the charities, you do some specific investment, you invest in PPF, Public Provident Fund, on National Pension Scheme. Then you get some benefits. However, deduction is if the assessee pays the concessional rate of tax under the default tax regime 115 BAC, only deduction in respect of employer's contribution, it is under ACC, ATCCD2, ATCCH, ATJJAA would be allowed. In new regime, only these three deductions are allowed. Have I explained all these three deductions? The answer is no. So don't worry about these terms. Section 10AA is a deduction in respect of unit established in SCZ. What is SCZ, by the way? What is SCZ? What is the full form of the SCZ? What is the full form of special economic zones? See what happens. You have heard of industrial areas? Have you heard of industrial areas? The government creates the industrial areas. They provide some benefits to them. There are specific special economic zones created. Normally, if you are into the business of exports, you can establish your business in the SCZ area and you will get a lot of benefits. Even your profits will not be taxed. You will get a deduction on the profits. Section 10AA. So special economic zones, the government has created special economic zones, right? The government has created many special economic zones, right? So to promote the businesses to do exports for the exports. 10AA provides a deduction in respect of units established in SEZ from total income of the assessee, irrespective of its placement in chapter number 3. Deduction under section 10AA is allowed from computing the total income. It is available only if they have exercised the option of shifting out. It is allowed only in the old regime. This deduction is not available if the assessee pays concessional tax in the new regime. The tax liability is calculated on total income, which is arrived after deducting the permissible deduction from gross total income. The difference between deduction and exemption is given here. You can study this, very easy, right? So the important point is to be noted that if there is no gross total income, no deduction is permissible. The chapter contains deduction under chapter 6A, which includes deduction in respect of certain payments, deduction in respect of certain incomes, deduction in respect of other incomes, and other deductions, and chapter and section 10AA. Clear? Now there is one deduction which I will briefly discuss, then I will close it for the day, okay? ITIA, which is not in your curriculum, but I want to discuss it. There is one deduction called ITIA. It is for the infrastructure business. It is not in your curriculum, but some reference is there, that's why I am discussing it, although it is discussed at final levels. Infrastructure business. Let's suppose you set up a solar plant. You set up a solar energy plant. Or let's suppose you wind energy plant. Now, if your business is infrastructure business, like let's see section 80IA, section 80IA income tax. Can you see deduction in respect of profits and gains from industrial undertaking engaged in infrastructure development? If you are engaged in infrastructure development, then whatever profits you earn, you get a deduction for it under section 80IA, right? Now it is deduction in respect of certain incomes. Deduction in respect of certain incomes. You have an income, you will get a deduction. Let's suppose your profits from this business are 1 CR. You will get a deduction of 1 CR. You will get a deduction of 1 CR. That is called deduction in respect of certain incomes. Now, this income is not in your curriculum. This section 80IA is not in your curriculum. If you will see, there is a chapter 6 says, come on this page number 7, heading number C. There are many sections, 80IA, IB, IAC, IB, IBA, IE. All these sections are not in your curriculum. Only these three sections, 80 JJAA, 80 QQB, 80 RRB are there in your section, are there in your curriculum. Only these three sections are in your curriculum. But this is called chapter number 6A, heading number C, deduction in respect of certain incomes. Clear? So, okay, so let's keep it till here. Let's keep it till here. Now, if you have any queries, you can ask. Anyone? Have you understood today's session? By the way, have you understood today's session? Are the concepts clear? Let me see if I cannot. Let me try uploading the file. If any one of you can check in real time, I'll just try uploading the file. In the meantime, anyone has any questions? I'm just unsharing my screen for once. Anyone has any questions? Income from house property, how it can be negative? Amar, you tell me, you have discussed house property. Interest, because of interest, can it be negative? Can it be negative because of interest? Clubbing is chapter number 4. Okay, I'll check it with the team for uploading the files. Okay, guys. There is some issue which I am facing, but I'll check it with the team. Okay. Yeah, Arun Sagar, you can unmute.
Yes, sir. Sir, actually, I have one doubt. In case if I have a loss in HP8, yeah, okay, I have a income in a salary and PGBP, not capital gain. In this case, I going to select with a capital gain, means I'm not adjust against to that. But someone is going to set off with the salary head. But gross total income will be same. But in the tax liability, it's going to differ, right?
See, if you have two heads where you can adjust the income, you will adjust where it is more beneficial to you. Let's suppose you have a loss which you can adjust against normal income as well and special rate income as well, right? Let's suppose if there is a business loss. Business loss you can set off against other sources as well as capital gains as well, right? Now
Yes.
you will set off first with other sources because they will have normal rate of income. Why? Because if you will adjust against the capital gains maybe let's suppose it is a long-term capital gain 12.5% and normally you are paying 30%. So you will adjust whichever is more beneficial to you first,
Okay.
in
Sir,
whichever
is
there is
there?
least tax liability.
Okay, sir. Sir, is there any no restriction condition from the ICA, right? Whichever you want, we can do.
Not ICAI even see ICAI is not writing the income tax. There is no such condition in the income tax act.
Okay. Sir, I have one more doubt. Okay, during the setup, first I need to be set of actual current year losses. Otherwise, first I need to be give priority to the carry forward losses.
First, you will do the intra-head adjustment. So you will set off the current year intra-head, then you will set off the brought forward losses, right? Then you will go to the other sources, other heads.
Sir, in case brought forward loss, we cannot be adjust against the other rates because you told carry forward losses we should have to be adjust the same rate, right?
Right?
Then how can I carry forward? Means how can I get to know which income I'm carry forwarding to adjust next for? Otherwise, what I need to be doing in this case?
I couldn't get your question, Arun Sagar,
Sir,
clearly.
what I'm asking means okay, HP8 is 100 rupees. Assume that. Okay, this year I have a loss another HP 50 rupees. Carry forward. Assume that I'm follow. Okay, I have the old resume. Carry forward loss is there 100 rupees. First, I'm going to set off with a 50 rupees this year. Remaining 50.
Wait. Let
Remaining
me write. Let me share my screen and give me your example. I'll solve it. Okay, tell me. What loss? House property loss? How much?
sir, current year one house property there is a income 100 rupees.
100 is income. Okay.
House 2 I have a loss 50 rupees.
House to have loss of 50. Okay.
Carry forward loss HB is 100 rupees.
Brought forward loss, you will say 100. Okay.
Okay. Sir, in this case, first I'm going to set up current year loss. So remaining balance will be 50.
Yes.
Now, okay, I'm adjust with the brought forward loss. Remaining, I will get 50 rupees minus. But it cannot be adjusted against the other rate because it
Yeah. So you cannot adjust it. Now the balance
brought
50 you
forward loss
cannot
need to be
adjust
carried
against other.
forward, right?
You will carry it forward and see next year's income. You will again
Oh,
carry it forward. The 50 you will again carry it forward.
okay, so that reason, sir. Okay. Sir, actually, I have one more doubt in income from other source. Sir, income from other source case, sir, other than maintaining, okay, loss from maintaining owning ourselves and casual income. There is other income like dividend. Otherwise, if I'm renting plant and machinery and other income, also they going to charge income from other source. In this case, if there is a loss, that time I cannot set off against the other rates.
No. So if you have loss from owning maintaining resources,
No, no. Means plant and machinery. This year I let out a plant and machinery, but actual repair, I done some repair or something. It is expenses more than my income. In this case, how can I adjust?
okay, you are talking about income from other sources. Let's suppose I'm not
Yes,
in the business of renting plant and machinery, but I have rented for once, right?
yes,
Let's
sir.
suppose because if I will be in the business of renting plant and machinery, I will take it to business profession. But let's
Yes,
suppose
sir.
I have rented plant and machinery for once, right? Now I have income of let's suppose 50,000. Now for this I had expense of let's suppose 60,000, right? That's what
Yes,
you are
sir.
asking.
Yes,
Now
sir.
This 10,000 loss you cannot set off against other sources. Losses cannot set off against other hand. You cannot set off against other head, and you cannot even carry it forward. There is no provision to carry forward the other sources losses
Sir,
except
is
only
this
maintaining resources.
okay? Sir, this rule applicable both regime, right?
Yeah, both regime.
Okay, sir. Sir, in case depreciation charges can be carried forward, right?
How can
Plant
you
and
charge
machinery.
depreciation here if it is not? Depreciation is in section 32. It is in
Sir,
PGBP. It is in other sources.
plant and machinery.
But
Means,
plant
sir,
and
I
machinery you have
cannot.
given for one-time use, no? If you will use the plant and machinery for business purpose, then you can give. Here you are renting the
Okay,
plant and machinery. This is one time. How can you charge depreciation on it?
okay, sir. Okay, if I want to charge depreciation, it should be under the
PGBP
PGBP.
head, right? Otherwise, how you
Okay,
will not be allowed depreciation?
okay, okay. That's it, sir. Thank you, sir.
Okay. Anyone else? Any other queries? Amar, that's a separate story. You have any other queries relevant to it? Amar, I will say first focus on your CA, then see about other courses if you want to do. Okay. Because CA will form the base and everything for you. Don't look out for other small courses. First, CA, if you will clear out CA, CA will provide you so much technicalities that you can handle any other thing, right? Anyone, any other query? The final call? Okay, then thank you very much, everyone. Team, we can close the session. Thank you very much, everyone. We'll meet tomorrow, right? Thank you. I hope you enjoyed the session.
Session over, sir.
Yeah, session is over. You can close. Yes. Sorry, who is saying? Sorry, one minute, team. Someone,
Okay,
yeah,
sir.
Maitri. Someone was asking something. You want to unmute and ask? Okay, team, we can close it. I think student is
Okay,
not
sir.
there. Okay,
Thank you, sir.
Recording stopped.